All right, what's up, everybody? Hope everyone's having a good weekend and had a pretty good week. This week we're gonna do things a little bit differently, just because we're gonna go over additional charts because we're kind of at a this is what I have to do at least when if normally what I do is you guys see me look at my two regular charts and um, if I'm normally able to figure out what I think the market's going to do off of those, right? But sometimes it gets too tricky for that, and we have to expand what we're looking at, right? So we're going to include a little bit of macro stuff, some different charts. I got the Aussie versus the yen. We got oil, and we got the 10 year up, right? That we're going to be going over as well to sort of put things in perspective. And just basically hopefully assist in uh, what we're about to see here, right? So first and foremost, let's just go over the regular ES chart on the 4 day that we've been basically tracking like for the past 6 or 7 weeks now. This has been the main chart, right? You can see that this candle closes on Tuesday. I want to say. So what we got, the 8th. Yep. So closes tomorrow on Monday, and new candle on the 8th, right? We're still below the 30 moving average. What I've done this time is I've taken the volume profile for the past three 4 day candles, which have closed below this 30 MA, because we're now, I'm only interested at this point in this range, right? Because what I think is going to happen this week is this range is going to break that we've been in. So I took the volume profile for those three candles, and what we get is this 42.75 is the beginning of the value area, where only 15% of the shares were traded down here, right? And obviously above here at 43.95 is the bullish level. So basically, at this point in time, with a daily close below 42.75, that's going to now open up, lower targets down here towards 4,029 and possibly even 39.32, right? But again, the level that bears need to, make that a thing, make that happen, 42.75.50. Need a daily close below that, and then we'll pretty quickly travel on down in that direction, right? What do the bulls need just from this chart? They got to go ahead, and there's been a lot of selling down here. We need to pop above this 43.74.50, get a daily close above that, and that's going to bring this 44.50 test that we've been looking for, which is also up here near the 200-day moving average, which is this yellow line here, right? I know we got a lot of stuff, but that's what it is, right? So the 200-day moving average is right around 44.57. We've got the 1x Bollinger Band resistance up here, the moving average, and there's the TD. This is the TD risk range, right? So we've got an absolute crap ton of resistance up in this area. And this is actually what I was calling for last week. I said we were going to come up here and trade 44.50 to 44.88. We only made it to 44.20. So about 30 points shy of what I was looking for last week. We sold off, and we're just sort of hovering about here, right? So that's what the bulls need to do. Again, that's a daily close above 43.74.50, and we should see that 44.50.50 trade. If you're a bear, you want to get a daily close below 42.75.50, and then we should start the process of creating new lows down here towards 4,029. So between those two things, that's a range, right? That's a 100-point range, and we're moving 100 points a day. We're moving 1 to 2% every day, intraday. So nothing really out of the ordinary at this point. But that's what needs to happen, right, to start a trend, in my opinion. Those are the two levels. All right. Let's check out the weekly chart on my regular regular stuff here. You can see that we're starting to enter into the areas of exhaustion in terms of TD, right? So this is now the 7th week of a lower high from 3 candles previous. We're going into week 8, and the lows or the highs are often formed in week 8. Just, that's generally how this stuff works. It can either be week 8 or week 9, but oftentimes a low or a high is formed on the TD8 candle, and then the reversal, whether it be a bear reversal or a bull reversal, often happen on the 9th candle, right? Not always the case. Here's a case where TD9, made the high. We kept on going, obviously, but many times that is what happens, right? So just an interesting, this is not some sort of analysis like, hey, the low is going to 100% be made this week, and I'm not saying anything like that. Just something to throw on our radar that TD8 and TD9 are coming up, right? All right. With that said, right, we put in this hammer candle here, and we put in this really sort of inverted doji hammer. It's not, I don't even know what the hell we would call this, but it basically rejected off the 8 EMA, right, and sold off pretty low, and basically closed lower for the week, right, which is not necessarily the most great looking signs for bulls, right? Anyways, I just wanted to point up this weekly chart just to kind of give you an idea of how long this has been going on, right? This is back since January we've been basically selling off, right? We got to go back in time to see, here we only did it for 4 weeks. Even in the March 2020 drop off, 1, 2, 3, 4, 5, 6, on the 6th week we rallied, right? So it's been this is the longest sort of downtrend we've had since March 2020, right? So just point that out, that it doesn't mean, as long as the 8, the trend is the 8 and the 20, right? So it's a strong, you're in a strong trend if you're above or below the 20, and you're riding it. But the immediate trend is always the 8, obviously. So we're still in a bear trend, but we are getting to points where historically, they make a bottom. All right, let's start getting into some of this macro stuff, because I wanted to just sort of point some of this stuff out, right? So this is the Aussie yen pair, and this is basically a risk off, risk on indicator, meaning investors they feel more bullish on risk assets when this pair is doing well, right? Well, I just wanted to point out that this green band here is the Bollinger Band, and when you're above it, you're in a bull trend, right? So I just want to point out that we actually closed above that last week, right? And you can see what happens when we're above this this Bollinger Band, right? I mean, you can look at this sharp rally, for over a year it rallied, right? You can see it again here, right? As soon as we got above it, kept going. As soon as we closed below it, we went down, right? So we chopped in between it, and basically we've been chopping this whole time. We just had a weekly close above that. All right, so that's a risk on signal right there, right? We'll see if the next week they dump it right back down, right? But this is just another indicator. You got the TD8 coming up on the weekly. You got this for the first time closing above the Bollinger Band. Basically this is just another indicator saying, we're about to move, right? Something's about to happen. Let's take a look at the VIX weekly. You can see we put in we've been bullish, obviously, on this trend as well, right? So this is almost a opposite image of indices, where VIX is now closing above its Bollinger Band, just like we saw here. putting in a red doji candle weekly though. Just want to point that out. Again, another sort of indicator that dojis. What do dojis mean? Indecision, right? Just another thing I wanted to point out, that this is likely going to be a week where we move, at least 200, probably 300 points. Okay, next big thing, oil, right? This is, I've been telling all the guys in the Discord chat, this is the trade I'm looking for the most, right? This is classic parabolic behavior, right? This is the daily chart. You can see, this is my bands, right? So basically what happens is price is contained within these bands, pretty much all the time, right? We came up here, instant rejection, right? But as soon as we closed above them, right, we started this parabolic behavior. And in that parabolic behavior, at the same time, this red band is acting as support, all right? So that tells me that this is the target, right? This green band's the target. Now, for those not familiar with how this stuff works, this is an absolutely extreme move, that very few things can actually trade up here to this green band. Like you're talking like Tesla type moves and things like that. So I'm going to go ahead, I'm going to go back in time just to show you. So this is the oil futures chart, right? I'm going to go back in time to show you the last time that we were able to trade up here at this green band. So if it trades Monday, it's going to be around 126.56, right? Let's go back in time. We're on a daily chart. And you got to bear with me here. Just, just keep on looking to see how rare and strong this sort of move is, right? I gotta crunch it. We crunching. Still going. We got a long way to go, but I know exactly where it ends. But let's just get there so you can see it yourself, right? Even on this parabolic run, never even came close to it, right? The moves that have to be made in such a short period of time to get up there are just, insane. So I really want you to get some perspective on how rare this oil move is, and the potential is for making a money on mean reversion is just insane, right? All right, so here we're back all the way to the 90s. So we have to go back to the Gulf War. So 32 years ago, since the last time we've seen such an extreme move in such a short period of time. All right. So basically what I'm looking to do, just so you guys know, and I'll be posting these, is I'm looking to, just like that LMT Lockheed Martin trade, I always want to play the first down, right? So as soon as we get up here, I want to short it, and I probably am going to close it the next day. And then the next big one that I'm going to be looking the short is going to be the secondary test, right? So a while ago, like sometime this week, I said that we're probably going to have a quick sell, like a 10 to 12% sell, followed by another rally in oil, right? Where did I get that from? I got it from here. I got it for the last time that this, the way that my system worked, and that's what basically, that's what I'm going off of, right? So I want to play the first down, and then I want to play the second down, right? But I'm going to monetize fast on the short, and then I'm going to be looking to just wait. We're going to probably wait. It'll probably take another couple weeks for the next top to come in. So that's a big play. We could see it down all the way back down to this red, so 108 from 128 or something once it's up here, right? That's a big ass move in a short period of time. So definitely I've got an eye on that. It's also not it's I guess you can call it a coincidence or whatever, but what do we have on Monday? TD8. What happens often? TD8 are the highs, right? It's not always. Sometimes they're the 9. Sometimes it keeps on going. It's such a strong trend, right? But point is, I'd like price to get up here, which is another 10%, and if we can do that Monday, I'm gonna be looking to short this. All right. So okay. So also, what should we? How does this relate to equities, right? Well, that could mean if this does follow through on Monday, this could mean that we're going to see a down on Monday, right? Oil up sharply, not going to be good for equity markets, right? So that could be Monday we see the down, okay? And we might get a close below 42.75 on Monday, might close down uh, below this 42.52 on Monday, and then I would expect a dump from oil on Tuesday or Wednesday probably, which would support equities. All right. All right. So now we're on the U.S. 10-year. You can see the high was the 8 and the 9 on the weekly, and you can see that we bounced off the 20 EMA and closed below the Bollinger Band, right? So we are at another important spot for yields, right? I think what's going to happen this week is we're going to see a back test up towards this 1837 level, and that's going to sort of set the tone for yields probably for like until FOMC, right? For like another week or two. So I expect that back test to happen. That's about 6% away. So I would expect some sort of support for yields, which is a bullish at this point. If yields rally, market's going to rally, right? So we'll see how that plays out, but that's sort of the level to beat, right? If we have a weekly close back above 1.837, you can expect we're going on to make new highs pretty quickly, right? If we remain below that level, then there's a good chance that we go down here to 1656 and sort of just probably go sideways a lot like this, right, for an extended period of time, I'd probably imagine, right? So those are the two extremes. 1656 for yields. If they continue to go down, that's probably not going to be the greatest for equities. If yields rally here, probably will be a little bit better for equities. So that's what I see for those. So what do I see this week, right? This week is an extremely, I've been able to tell you what's happening here, and with accuracy over the past 12 weeks, 10 out of 12 weeks, right? So this week is actually probably the hardest week that I have to make a call, right? But, I got to make a call. So right now I think that Monday is going to be a down day. I think oil will continue to rally and hopefully make a high on Monday or Tuesday, right? So the first part of the week's probably going to be down for equities. Now, how much down that's going to be is really going to be determined by, does this level get taken out? We get a daily close below 42.75.50. If we do, then that opens the door for this 4,029 to play, right? And you'll note that this is in stark contrast to what I was calling for last week. I wanted to see the 200-day trade last week, right, at 44.50, right up here. So, what I think the only way 44.50 is going to trade at this point is if, we have down days, but they still manage to keep price above this 42.75. And if they can keep price above 42.75 and oil goes on to rally another 10% or so, I would say by Wednesday, we could then get our rally to 44.50, and at that point it'll probably go higher, up towards like 4,500, right? 44.88 to 4,500. So that's what I see. But any daily close below 42.75.50 is pretty bad here. and unless the very next day they rally it, we're going to start that descent down to 4,029 most likely. So I hope that's helpful. I may play the indices this week, but what I really want to play is that oil trade. If we catch those a couple times, they're pretty safe plays. Like you can buy 1 to 3 month strikes, and with the sort of moves that I'm expecting, like a 7 to 10% day, you can still double your money overnight, even on like a 3 month strike. Right now, if you're more risky, you could play shorter strikes, right? But that's not what I'm gonna do. I'm gonna probably buy a 3 month strike and be looking for that mean reversion to kick in, and then I'm only gonna play the first down, and again, we're sort of assuming that this happens, right? Like I said, I showed you, we had to go back to the 90s before the last time this occurred. So it might not even happen, right? I don't, I can't say, but if it does, I am super, super stoked about this trade, right? This will be the trade of the year for sure. So that's the game plan for me this week, and depending on how oil plays, will probably determine whether or not my focus shifts back to the indices. And any way you cut it, it should be a pretty eventful week, right? We're at 43.27. If we get a daily close below 42.75.50, wouldn't surprise me if this 4,029 trades by Friday or early next week, maybe Monday or Tuesday next week potentially. So that's it, guys. I hope everyone is, as always, stay safe, set your stop losses, and let's have a profitable week, boys.